Hopefully your tax planning is in full swing as we near the end of the year. What is your biggest tax planning question that you are facing right now in your financial life? I'm going to hit the most common, that and more coming up. Tax season is coming up and the questions that we are getting are piling up. What is your biggest question as it relates to tax planning? This is crunch time for tax planning. When I'm recording this right now near Thanksgiving, and so in the fall and October, November, and into December, this is the sweet spot for your year-end tax planning. The spring, yeah, there's some planning there too, but it's mostly reactive. You're into tax preparation mode. Now is planning mode. That's the creative, proactive planning work, opportunistic work for you to look at your tax picture this year, as well as a future, several years out into the future, and try to figure out, well, what can I do right now to set myself up to pay the least amount of tax over my lifetime, if not multiple lifetimes. Sometimes that is capturing deductions today, taking advantage of, let's say, the senior deduction, the increased SALT cap, and making sure that you itemize HSA contributions, so all that sort of stuff pre-tax. Sometimes it's inviting some tax into this year so that you avoid paying it at higher rates out there in the future, or avoid paying it out there in the future where there are sort of tag-along taxes like IRMA and so on. So today, going to ask you directly, what is your biggest question about tax planning that you're facing right now? Leave it in the comments below, and I'm going to be addressing these questions and answering them in upcoming videos. No question is too simple or too advanced, and plus, if you've got this question, odds are someone else has the question as well. We do a ton of tax planning here at KFG, looking at all 6 areas of your financial life. Tax planning is one of those areas. Our team of certified financial planners collaborates with our team of CPAs and does a lot of proactive tax planning work. So I want to hear from you. Your greatest tax planning question right now, leave it in the questions and comments below. Now, to get things started, I'm going to answer one of the most common tax planning questions that we get from our clients, and it's really no surprise. My guess is when I tally up the questions that you leave in the comments below, my guess is most of them are going to pertain to this same thing as well, and I want to address that question up front, and that is, should I do a Roth conversion before the end of the year? There's no question, Roth conversions, they spike. The number of Roth conversions done, they spike in November and December. This is prime time to be making this decision. Why? Because you've got to have the decision done. You've got to have the Roth conversion done by 12/31. We get that question a lot. It's got to be done by the end of the calendar year. You no longer can even do the recharacterization up until April 15. You can't do that. The Roth conversion has to be done by 12/31, and that is it. It is final. And so why is now the time to be really answering this question or asking it if you haven't already done so? It's because right now you have the greatest perspective of what your income is, what your taxable income is going to look like for this year, and you're well equipped right now to look at that year and say, well, does it make sense for me to add some more income into this year and do that Roth conversion? In order to answer this question, you first need to build out that proactive tax plan. You need to actually do the math and calculate, all right, here's what I think this year is going to look like from a tax standpoint. See, a lot of people that make assumptions and don't really sketch it out and compare it to the previous year, and they end up overlooking a source of income. I decided to do a Roth conversion and I forgot about this sort of thing. And so make sure you do that math. We call that a tax projection, where you list out, all right, here's what I expect all my wages to be: interest, dividends, capital gains, other withdrawals, other sources of income. You add that all up, you subtract out above the line deductions, you make assumptions about whether you're going to itemize or get the standard deduction, and then you look at your taxable income. So you're going to want to map out and build out that entire full tax projection of what you expect to happen in 2025, and then add a column. All right, so if that's your base plan, now add on, well, what would it look like if we did a Roth conversion? Here are a couple scenarios where I would say, yes, you're going to want to do a Roth conversion. If when you do that analysis, that tax projection, if there's room to fill up the tax bracket that you're in without creating any other consequences. So if you're in the 12% tax bracket, this is for for a lot of you that are retired and maybe taking advantage of the new senior deduction, you've got an extra $6,000 if you're eligible for it, an extra $6,000 of deduction this year and for the next 3, so 4 years in total. Is there room right now for you to fill up that tax bracket, the tax bracket that you're in, 12%, by doing a Roth conversion and saying, yeah, I'm willing to pay a little bit of tax at today's low rate so that I don't have to pay tax on these dollars or the growth on them out there in the future. So whether you're in the 12%, 22%, 24%, is there room between where you expect to be and the next tax bracket? And would there be any tax consequences by filling it up by doing a Roth conversion? And then a second time that I would say, yeah, it seems ripe right now for you to do a Roth conversion before year end. And this is where I said that you do that tax projection, but then you're also projecting out several years out there in the future. If you can anticipate out there in the future, yeah, you know what, we've got more income sources coming in a couple of years or in a few years, we're going to be moving into a higher tax bracket. We're going to go back to 2 incomes. Something's going to change in your tax picture. Sometimes you can anticipate that. Say if you potentially could be getting an inheritance, depending on your job and your sources of income, you can get a sense for, yeah, I think income's going to be higher out there in the future. If that's the case, yeah, invite some of that income into today's low tax brackets before your income spikes out there in the future by doing a Roth conversion. But lastly, you also need to be aware, even though this is the most common question that we're getting, should I be doing a Roth conversion before year end? You need to know sometimes it's wise not to do a Roth conversion. Even though we talk about it a lot, it's a key decision. And sometimes the wise choice, the right choice, is not to. One reason is because, well, you typically advantage Roth when the market is low. Well, the market is high. And yeah, we've had some volatility recently, but the market has far surpassed most people's expectations of this year. And when you look underneath the hood, which I do a few times throughout the year here with you guys, looking at the price earnings ratio and different valuations, right now valuations are stretched. And so, yeah, the economy can grow into it. Stock market certainly has room to run. And yet you wouldn't say the market is cheap. And so that's one reason where if there aren't any other compelling reasons to do a Roth, maybe wait for a buying opportunity and see if there's a market pullback out there in the future, and then maybe do a Roth conversion. But then the other reason why I would hesitate is if, as I said, hey, out there in the future, if you can anticipate a spike in income, maybe you do a Roth conversion this year. If this year is a spike in income, then you're going to want to delay. If you're already at the top of the tax bracket or in the next tax bracket where you say, yeah, next year, I'm not going to be in the 24% tax bracket. This has been an unusual year. We had some capital gains. I got a bonus that I'm not going to get out there in the future, something like that. Then you're not going to want to do a Roth conversion this year. You'll want to wait until next year or the future. So I hope that helps a little bit. The question of should I do a Roth conversion before year end is one of the most common questions that we get, and it's based on your unique and specific financial situation. All 6 areas of your financial life. Tax planning is one of them, but the big idea with comprehensive financial planning is you can't look at these 6 different areas in a silo, in a vacuum. You can't separate them and say, nope, this is just isolated to this one area. No, your tax picture is connected to your present financial position, your cash flow. Of course, it's connected to your investment planning, your retirement planning, even your estate planning needs to be considered. What about future income-related monthly adjustment amounts, IRMA? All of that is baked into and needs to be considered when you're deciding whether you should do a Roth conversion or not. So you got to work with your certified financial planner who's looking at all 6 areas of your financial life. They can help answer this question. Should you do a Roth conversion before year end? And if so, how are you going to manage the taxes? Should you withhold? Are there other options for you? Work with your certified financial planner on that. And yes, whether that is your question or you have another tax planning question, leave it in the comments below. I'll answer it on upcoming videos. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with KWiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.